Hey folks, it's Ray with Taste Radio, and right now I'm honored to be sitting down with Daniel Tejada, the co-founder of Straight Up Growth, and Manny Lubin, the co-founder of Slate Milk. Manny, it's great to see you.
Hey Ray, how we doing? Thanks for having me.
I'm doing fantastic, and Daniel, fantastic to see you as well.
Thanks for having us on. Super excited.
Yeah, absolutely. Now, Straight Up Growth, I am just so happy we're talking about your company, Daniel, because you have helped so many CPG brands optimize their business on Amazon.com, literally in the billions in terms of revenue that they've generated on that platform, and you've been a big part of it. Just talk a bit about the origins of the company and how you work with our CPG industry.
Yeah, so I have a team that's been working the Amazon industry for quite a long time. I may not be that old, but I've done Amazon for over 10 years. Before it was cool there. Uh, I basically just saw a need of a higher level of service, right? I think that there's a lot of executing, partners out there, and so they're going to help you get to a certain ROAS. They're going to help you kind of execute on the goals you're set, right? What we do is we are actually on the strategic side of things, right? So we come through and help brands to understand what goals they should have, right? What sort of sales targets should they look for? What sort of spend should they go after? Even what products to sell, on Amazon. At the end of the day, we're here to help you find what you're looking for.
And Manny, I think you can vouch for Straight Up Growth in that Slate Milk has become one of the fastest growing brands in the beverage industry. Congratulations on all your success. Your e-commerce business has been really remarkable to see. How did you get in touch initially with the Straight Up Growth team, and how did you align your growth strategy with their abilities to optimize your presence on Amazon.com?
When we started the company, it started with the idea of creating healthy chocolate milk, giving chocolate milk a clean slate. You can see I've done that point a few times there toward the slate sign. It really evolved into a better for you protein drink brand. And we created the company to solve the need of customers where they wanted protein drinks that had better ingredients, better tasting, better for the world, and better macros. And I think using partners like Straight Up Growth to make sure that our messaging is correct and every word and every image is pulling out the proper message, positioning us to be the best that we can, and ensuring that we're doing everything that we physically can to drive customers through Amazon. We look for partners that want to build with us, not just do the work. And what Daniel and Evan and the sub team has done is really added value by making recommendations versus just saying just pulling levers.
Daniel, what were some of those recommendations? I think when you're on Amazon, some of the biggest mistakes that brands can make are just allocating money in the wrong places. How did you help Slate identify ways where they could use that money intelligently and efficiently?
So I think there's a couple things. I think the most basic is something like advertising efficiency, right? We have a metric called wasted ad spend, especially for high growth brands. Beverages are expensive to sell, right? Profitability is not necessarily ideal in this category when selling on Amazon. So one of the first things was reducing wasted ad spend, right? At this point, we've scaled our ad budget significantly, but we've increased our ad efficiency significantly at that same point. Another big piece, which Manny touched on, is content, right? At the end of the day, um, your image stacks, your premium A plus content, your brand story, those are the three things customers are really choosing to make a decision off of. And so that's an area that we definitely optimize across the board with our clients. And then it's really spending with intention, right? A lot of brands, they'll spend aggressively, but they have a lot of spend, out in research campaigns, things like that. What we do is really narrow down that focus on things like exact match, competitor conquesting, but really break it down at a product and keyword level. And at the end of the day, efficiency is king, right? Every year, Amazon gets more and more competitive. And so you have to be more and more efficient if you're going to, squeeze out profitability and growth at the same time.
Obviously, there are a bunch of companies out there that say they can support a brand's presence on Amazon or optimize their presence on Amazon. But when you were looking for a partner, and you use that word a number of times, Manny, when you were looking for the right partner, What did you see in straight up growth that made you feel comfortable and not only comfortable, but excited about the opportunity to do business and to create a much more robust revenue stream on Amazon?
Yeah, it's a good question. We did talk to a handful of partners, and Daniel and Evan know that. And there are some great ones out there. There are other fantastic Amazon partners. I think for us, we looked at the individual people, take straight up growth aside. We looked at Daniel, we looked at Evan, we looked at David. We talked to each of them, and we just think they're smart people, is what it comes down to. I think we talk about this a lot at Slate, the name on the back of the jersey versus the name on the front, right? Like who the people actually are versus what team they play for. Obviously, you want all the pieces to work together. But if you think the individual people are smart, you like the way that they think, they challenge you to think differently, where there's kind of a way of thinking of what works, and then they think a little bit differently where it still can potentially get you to the same result, which is what we all want, which is success and growth and profitability and a strong business and brand. I think that's what made Straight Up Growth stand out was the individual thinking paths of the members of their team.
One thing that's funny is Straight Up Growth and Slate Milk first met. We actually didn't work together after our first pitch. We talked for a while. We were all very authentic and transparent for each other, but it didn't work out initially, right? And then they came back, and now we've got a nice long-term partnership. Because at the end of the day, I think having partners that are authentic, right, is really important. Manny and his whole team is very transparent with us. Even when they didn't do a deal with us, they told us why, right? They let us know, look, this is how we're feeling on everything, and we're the first to be like, yeah, that makes sense. But now we've come back and we've delivered results.
Manny, when you were looking at potential partners and laid out, even beyond the personality mesh, did you have clear, defined goals for Amazon? And did you share those goals with Straight Up Growth? I mean, obviously, if I were an entrepreneur, I'd want to say, okay, well, if we're going to work with you guys, we have these targets and we want to achieve these targets. Did you come to the table with that? Was that something that helped this become a successful relationship?
Yeah, it's a good question. I think there's kind of this myth out there. Maybe it's not a myth for some brands, but everyone wants to grow as fast as they can, as quickly as they can, and with spending as little as possible. Which obviously that's great business, but with significant growth, not just Slate, but any brand that's growing somewhat quickly, there are going to be pain points, some of which you know are going to come, some of which you don't know that are going to come with any sort of scale. So when we went to Straight Up Growth and when we were interviewing partners, we came with kind of different scenarios of speeds of growth. Obviously, the goal would be significant without getting out of control. But I think we came together and we said, what is realistic here? Right? I don't think we're going to go from $1 million to $1 billion in 20 months, right? I don't think that's a realistic path, but we have aggressive growth goals. We know that we teamed up actually kind of before the RTD protein movement was really happening, which I think even the last 24 months, you're really starting to see it pick up. I think that we anticipated the RTD protein space was going to grow rapidly, so we wanted to get ahead of it as much as we could. But with straight up growth, I think we put together a realistic plan of, all right, this is an aggressive goal. This is kind of I don't want to say conservative goal, but more of a base goal. And then you even potentially have a fallback that might be a little bit more of a focus on profitability, and let's choose which one we want to attack that one, and then we know that we're speaking weekly, if not daily, and we can adjust the plan as needed based on macro trends, based on how the SKUs are actually performing, how people are responding to the ads. Can always take up tacos up and down on, pretty much on the snap of a finger, seasonality, etc. So again, I think the versatility and the nimbleness that straight up growth brings goes in line with Slate's philosophy of setting a goal, attacking that goal, but changing it as needed if needed.
Excellent point. Well, I don't think there's any argument here that Slate and Straight Up Growth are great partners, and I hope that continues for many years to come. I think there is a question as to how do folks that are listening and watching get in touch with you and the team, Daniel, at Straight Up Growth. What is the best way to connect with the company, and what should folks be bringing to the table for that initial meeting?
Yeah, great question. You can always find us at straightupgrowth.com, or I'm pretty loud on LinkedIn. You'll probably see me in your recommended feeds at some point in your life. There, so you can always reach out to me, very friendly. I'd say for brands, my biggest thing is understand how your last 12 months went, right? And break it down in a quarter, right? Did you achieve your targets for the year? Were you happy? Were you sad? If you didn't achieve them, do you know why, right? And start to think about that. Were you out of stock? Or was it simply a management piece there, right? Were there things that we could have done to help us get there? At the end of the day, we have this awesome audit analysis that we can do to help you answer a lot of those questions.
Fantastic. Well, Manny, Daniel, thank you so much for taking the time. Let's definitely stay in touch.